taking a win. The idea is that we want to use defensive stops just in case something happens in the market and you don't get wiped out. So your stop should be a distance away from the nearest peak or trough, and that keeps you from getting stopped out on a stupid daft spike in price, which always seems to catch a lot of retail traders out. And it's when you start seeing the value changing, that's when you bring that stop a lot closer into the price action, when you want to be taken off the trade and you don't want to take it off because it's not hit a target. Well, you can still get taken off with a more aggressive stop right behind the price if that's what you're wanting to do, because the value is starting to shift. That way you can still benefit perhaps from a price breakthrough, but at least you're not going to give back a whole wad of profit sitting on a stupid, daft, dumbass trailing stop. The one thing you should never use is these stupid, daft, automatic trailing stops. I think they're the biggest bane I've ever seen in my life. The most stupidest, dumbass idea I've ever seen in the world of retail trading is a trailing stop. I don't mind trailing stops manually, but these stupid automated concepts of trailing stops I think is absolutely preposterous. And what you normally find is the exact point, interestingly enough, the exact point where your trailing stop is probably going to be the point where you should actually add more into that position. It's funny how that works, isn't it? Funny how the software does that specially for you. Here's the perfect add-in trade. So what I'm going to do is I'm going to take your trade off so that somebody that's got a bit of a brain can add into a position at your expense. Thank you very much for your trailing stop software. Woo! Brilliant. Love it. Anyway, load of bollocks. Don't use it, and do it manually. Make your own decisions. Don't let the market run those types of algorithms. They are stupid. They are no point to their existence ever. They are basically the oxygen thieves of the trading indicator world, is trailing stop softwares. So I suppose that's made the point, hasn't it? Welcome in, guys. Let's get through the data today. Thursday, April the 3rd. It is Services PMI Day today. And Services PMI Day, we do enjoy this, especially in the UK. It is an important, part of the UK economy is services PMIs. We do generally outperform most of Europe on the services PMIs, especially the Germans and the French, that's for sure. But they do always outperform our manufacturing generally as a rule. So that's one swing and balance and all that kind of stuff. So looking at the overnight session, we started to see the Cation services coming out of China, slightly better than expected, actually, at 51.9. We came into the European services and the almost irrelevant Spanish and Italian numbers coming in slightly lower than forecast, but they were still above the 50, so reasonable, but not very important for the bigger Eurozone economies. French services PMIs come in again below 50, but 47.9 was still at least a little bit better than expected. The German services PMIs 50.9, it held the 50 bid, and it was slightly higher than forecast. So that's a good number for German services PMIs. But the most important number for us this morning, the London UK services PMIs, 9:30 this morning, came in slightly disappointing at 52.5. It is still above 50. I did say yesterday that if we got a drop below 50, this would be disastrous for the pound, for example. Well, it was nowhere near a drop below 50. I was expecting it to be lower, to be honest. But 52.5 is actually slightly at the upper edge of my own forecasts on this services PMIs, and therefore I'm not looking at it as a bad outcome. The big conversation pieces that we've had today has been this OPEC Plus or OPEC GMMC meeting, and we've seen that they are going to be pumping some supply out there, guys. We're going to pump some supply out there, and that's causing oil to be in a little bit of a solid drop phase. And that gives us a bit more to contend with as bond traders. We now have a risk-off, flight to quality Trump narrative to work with, and we also now have a drop-off, quite a strong drop-off in inflation drivers. So we've now got a conflicted story here. It's going to make life very interesting for bond traders. In that case, a lot of the trades you want to be doing would be spreads. You're not really necessarily trading the directionality of treasuries because you don't know what direction they're going to go in, but you would be able to trade some of these volatile spread opportunities, something we talked about this morning in the gilts class that I ran this morning. If anybody is interested in trading gilts, there's not a lot of point in doing a gilts class in the afternoon session, because if you're not intending ever being in at the London Open, what the hell do you want to know about gilts for? It's not going to really be the market for you. So it's really just a classroom for the London session, for London session traders who are going to be taking advantage of that gilt anomaly every now and then, or Bund anomaly if it's the case. Coming into the afternoon session, coming up in just 4 minutes, in fact, we do have the important unemployment claims numbers. We did see yesterday, of course, we saw the ADP non-farms number coming in at 155,000, a lot better than expected. So the numbers this afternoon, the unemployment claims expected to come in at 225,000. A lower number would be good for the economy, obviously, as you would imagine. But we also have, probably more importantly, we have the final services PMIs at 245, expected to show a slight decline. And we also have the ISM services PMIs also expected to show a slight decline to 53s from 53.5. So these are numbers that could have a market driving opinion. Because of what? Because everybody's got a fear attached to their trading today because of the temper tantrum over the tariffs. And because of the temper tantrum over the tariffs, there is a fear. Everybody's worried about the market catching another sell. That makes it very wobbly at the bottom edges. And when we get a little bit of a wobbly market, there's a lot of people with a very, very delicate constitution, and they all start doing some stupid stuff, selling at stupid dumbass prices. These are going to be opportunities in the right environment to maybe pick up some very, very nice discount prices to buy into. So I'll certainly be watching the smart money today to see if they fancy a bit of action on some of this. Gold, we have finally got that break, so that was nice. We were short gold from earlier on today. We had a target price this morning of 31 handle. We've just gone offered now from that trade. That's now a $5,000 per contract swing. $5,000 per contract swing, guys. Sell side gold. Who would have thought we could have made a $5,000 per contract swing? Anyone? Anyone at all? Anyone? Who thought $5,000 was a thing? Well, if you read the tweets, we did. If you read the tweets from last night, we told you 5,000 was a thing, because there's a tweet right there, look. See it? It's not surprising. Look at the range for a zero. $5,300 per contract swing. We told you what the range was going to be. We told you it was madness. So we want to be in a long swing position or a short swing position, whichever floats your boat. And when real yields opened significantly higher last night, are you going to be buying gold at any stage? When real yields are really high? What do you think? Anyone? Anyone want to buy gold when real yields are popping higher? That was a bloody stupid. Gold doesn't pay a yield. Gold's a non-yielding instrument, so you're going to sell gold. So when we get this very, very aggressive pop on real yields from last night, does anybody not see the pop on real yields? Look at it. That's a higher real yield there. See that? That red line? Higher your real yields. If you don't sell some gold, you're giving up a massive opportunity to make potentially 10 grand today, guys. Because that's what the standard deviation trade is 10 grand, right? So we run some liquidity here. We're looking at a $5,000 sell-off from those ones. And then perhaps if we're selling at 92 top line today, the bottom edge should probably be 30.92. 30.92. So we're aiming for 30.92. So guess what? We've just traded 30.95. We're not far off a $10,000 per contract sell-off from last night's big drop in that red line, or big rally in real yields. Great trade, right? Great, unbelievable trade. Why are we booking? Biggest volume of the days just came in. Biggest volume of the days just came in, guys. So might as well get your monies, bag it and tag it, and get ready to look for someone else, right? Beautiful. What a day, guys. What a day. So if you didn't read it and you didn't take advantage of that, well, that's up to you. I mean, it's your choice, of course, at the end of the day to take these trades or not. But yeah, we're off and running into the day itself. We'll see what the rest of the day's got for us, guys.